it's hard to have a view on the long run when you're looking at this intraday volatility in stocks. We got rather used to the bounce back, and now we've had 3 days of losses. You think there's further to fall?
Well, I think that stocks are approaching pretty attractive levels for long-term investors. Listen, we wouldn't have those great long-term returns unless these short-term fluctuations scare so many people away and keep the prices relatively low. I think what the market's reacting to today is the jolts data, which were strong, the tick up of consumer confidence. Now, all that should be good. And by the way, don't ignore the housing data on prices shows well below expectations. And I actually believed when I watched Chairman Powell on Friday that he was being too pessimistic about the inflation outlook. I think on the ground, inflation has definitely peaked, even though in official statistics, we know because they're lagged, we're going to have a lot of, trailings of inflation. But housing, for instance, I think housing prices are actually going down at the present time.
What does this mean for when the Fed could actually start to shift and start cutting? You see that chorus of Fed presidents also coming to the do what it takes attitude to cutting inflation, but is there a risk that this might take some time, maybe throughout 2023?
Well, the market's pricing in another 125 to 150 basis points. My feeling is that they may not have to go that far. I mean, I may be only 100 basis points from the current level. A lot of people are talking about 4%, but I think they're looking at the rear view mirror when they look at year over year pricing rather than forward inflation. And as I say, taking a look at the real estate market, take a look. Well, you mentioned about commodity prices today. I mean, oil has been fluctuating. Oil is very, very high in Europe, but commodity prices basically have peaked. The only area that's still strong is the labor market and wages. And honestly, they have not kept up with inflation. I think firms are just going to have to, if they want to get the workers they need, they're going to at least have to pay up for inflation. But on the ground, inflation is not as serious as it was 6 to 9 months ago.
Have bond yields peaked?
I think 3.5% will stand that we had earlier this year as the high. And we know inversion is going up. I mean, you mentioned, the fears of the Fed being really strong has pushed that 2-year up, but you really see the 3-year going just modestly above 3%. And that inversion, to me, signals that the Fed has to be careful, just like they were way too slow to tighten in 2020 and 2021. Let's not overdo it and over-tighten and cause a severe recession in 2023. I think you got to look on the ground on what's happening to prices, and they're much more favorable than some of the fear that Powell instilled in a lot of investors on Friday.